Okay. Well, we're going to start. So, good evening. My name is Linda Kreitzman. I'm the Executive Director of the MFE program, and I'm going to ask the members in here of the panel to discuss their backgrounds, their experience, and their path, how, what path they took to lead them to who they are now. So, Jim?
Are we all set? There we go. So Linda asked me to spend a couple minutes and just give an introduction in terms of how I got to where I am. I am a master's in financial engineering 2002. I was in the first year of the program. I grew up in the west coast of Canada, and my undergrad was in commerce, specialization in finance from the University of British Columbia. When I graduated, it was 1993, and it was right after a pretty significant meltdown in financial markets. It was a very difficult time to get jobs in the early 90s. I had an offer to join the trading desk in Toronto at RBC Capital Markets, and I had another offer to join the buy side. And at the time, I didn't really know the difference between buy side and sell side, but the buy side was in Vancouver, and my wife wanted to stay in Vancouver, so I decided to take the buy side job. Our firm, called MK Wong & Associates, was purchased by HSBC, the Hong Kong Shanghai Bank, about 3 years after I joined. So I was a partner, and we decided to become the Canadian arm of HSBC Asset Management. I moved on as a fixed income analyst to fixed income portfolio manager and became co-head of the investment team in Canada. Spent time with HSBC in New York, London, and Hong Kong in a variety of roles for them. I joined the MFE program starting in early 2001 based on a personal relationship with Gifford Fong of Gifford Fong Associates. I'd known him for close to 8 or 9 years, and he suggested that based on my interest in mathematics and statistics and computer science, that it would be a good program. It was the first year, so there wasn't a lot proven in it, but I thought that it would be an interesting opportunity. So I graduated in early '02 and had an opportunity to run HSBC's New York office, and also had an opportunity to join Barclays Global Investors. They had just been in the process of building out their active fixed income effort. They had a very substantial index fixed income effort, and asked me to join to help build out their active research. So I ran fixed income research for several years for them, and then about 18 months ago transitioned back to the investment side. So I run the fixed income investment team, about 35 portfolio managers and traders across corporate credit, securitized credit, rates, agency mortgages, and emerging markets. We also have about 25 research professionals. I think in total BGI has 18 Masters in Financial Engineering graduates working at the firm. And just in fixed income, my area, we have 7 Masters in Financial Engineering graduates working for us. So that's basically the introduction for myself.
My name is Arnold Miyamoto. I work at Citigroup in the foreign exchange sales and trading area. I wear basically 2 hats. On a global basis, I direct what's called research, although for compliance and legal reasons we don't call it research because I sit in the business. There are several core functions in that research area, from the least quantitative, which would start with strategy. It includes technical analysis. I have 2 risk advisory groups, one that faces towards the corporate sector, another one that works with hedge funds and real money managers. I head up structuring and then new product development. So there's about 40 of us worldwide, kind of in that capacity. And then domestically, I am the head of sales and trading for North America. And so in that capacity, I have all my research guys, sales, trading, prime brokerage, e-commerce. That's about, 100 or so. And then I got dotted lines to ops, which is another 100 or so. And so I spent a lot of my time doing admin things. Not doing research anymore. I started my, much like probably many of you in this audience, my undergraduate degree is in engineering. I was a chemical engineer. I actually worked as one at Bechtel. This was a long time ago. really before CAD/CAM, and I remember the draftsman asking me what kind of screw he wanted to put in a plate that was holding a bunch of wires, and that's when I decided I was going to apply to business school. And that is a true story. And so I went to B school down in Los Angeles at UCLA. During my second year at B school, I had landed a part-time job, which eventually became a full-time job, with a buy-side shop called Leland O'Brien Rubenstein, or LOR, which, and probably those three names are very familiar to you because they're sort of associated with the university. I was there during the market crash of '87, which, if you don't know what that is, you'll probably hear about it in Mark's options class. And it was quite an experience. From there, you know, in John's words, I probably joined the dark side. I went from LOR to a tactical asset allocation house where I basically developed an active currency model. And it was a very small shop, you know, both LOR and TSA were. TSA ended up essentially blowing up. A third of us went to the street, a third tried to start their own firm and lasted all of 6 months. A third remained, and they ended up being acquired. So I've been on the sell side since '91, a long time. The majority of my career was on the West Coast. In 2002, I moved from the West Coast to New York. I spent much of it with Bank of America. I held a number of different jobs. I was the head of FX and EM research, and I was the head of their kind of interest rates and everything else stuff. And then came the great divide between research and non-research. And in that capacity, I wanted to stay in the business, which I couldn't do if I was in research. I then went back and ran the quant groups, and then I basically was a proprietary trader and basically was the largest position taker that B of A had in New York. And all of my positions were quant-driven models. I joined Citi in September of '04 to head up this kind of area we call value-added services and products. That's the combination of all these research groups. And then in July last year, I was made the head of North America. That's me.
Yeah, hi. I'm Terry Benchowell. I am also with Citi. I'm director of credit modeling there. Some of you have already seen enough of me today, probably, but in any case, and know a little bit of what I do now. But what I do now is head up credit modeling, and one of the other things I do, which is what I was here for this afternoon, is that I coordinate associate level recruiting for the fixed income strategy and analysis department at Citi. How I got started, my story is somewhat similar to Ron Kahn's, actually, and as it turned out, I asked him after we went through the same recruiter what happened. I actually am trained as a psychologist. I'm probably one of the few. I'm an experimental psychologist. I got a PhD in 1980 from Indiana University. I'm what's called a psychophysicist. I studied the relationship between energy and sensation, and my link with why I might be at all a suitable candidate for what would be called a financial engineer, which is pretty much what I think I am / strategist maybe. But in any case, is that I was used to working with large data sets on computer because I would simulate putting light energy in the eye and how it got transformed by the brain, whatever. That was what I did. I came here on this spot. Actually, I had my office for 2.5 years here from 1980 to 1982 in the Department of Optometry studying eye diseases and other things, after which I left for Johns Hopkins University and did a postdoctoral fellowship in ophthalmology. So again, modeling eye disease and whatever. Got a job at IBM designing, my specialty was human color vision, so I got a job with IBM designing the liquid crystal displays for color LCDs, which didn't exist at the time. I mean, they wanted to know how to arrange the red, green, and blue picture elements on the laptop computers, and there were certain novel ideas taking advantage of certain properties of visual systems. So I did that. So having had 3 postdocs in 3 different fields and having graduated in a different field, I was facing a 4th postdoc, and I was sitting in New York, and I apparently read the same ad that Ron Kahn did, because we went to the same recruiter. It said, my ad said, scientists earn big dollars on Wall Street. And, it's up to 100K, which I'm sure all of you will make more than that when you graduate, of which I made less than when I took my first job, but nevertheless, that was a lot of money. But the point is, and just like Ron said, he thought he had a very low chance of getting a job. In fact, I went into the recruiter in my somewhat longish hair, and I had a little cut-off tie and a tweedy jacket, and she said, they're going to eat you alive. You're not unfit for this. And so seriously, and I was sort of discouraged, and I went out and got a couple other jobs I was going to go, and I don't know, they must have put my resume in as filler in some stack of resumes they sent to this guy at Chase who was modeling corporate bankruptcy. And he looked at my background, thought it was eclectic. He was a mathematician. He called me in, and I said, look, I've already got these postdocs lined up. I got to make a decision. He goes, well, you can make a decision in a day. Whatever. I went in, and he hired me. And so I stayed in New York, and I did that. And and for me, that once I got that first job, right, then and that's really true in this business, right? Then you start building experiences. What happened was, Chase, it was a special project for the chairman, and Chase didn't exercise the option on my boss's company, so I immediately went to Citibank, which was in the credit card division, building neural networks to detect fraud on the credit card portfolio. It would queue up all the credit card transactions, hundreds of thousands of them a night, and indicate which ones were most likely to be fraudulent, and they would call people up in the morning and whatever. And anyway, I met serendipitously, this is why you're not going to be able to follow this. I had a career path, but I was on vacation on Long Island, and I met, through my girlfriend at the time, a managing director at Salomon Brothers. This was 1991. And, I started talking about parallel computers. I was working with the people at MIT benchmarking the thinking machine, connection machine against the IBM 3090, to see which could process faster and whatever. And he was head of technology at Salomon, and I talked about that and all the neural nets. And he said, we can use smart guys like you. He passed my resume on to somebody in the ARB group at the time, Salomon's arbitrage trading group, and they called me for an interview. And I got a job, knowing nothing essentially about finance. Again, I had some commercial banking experience at the beginning, but not any real investment banking experience. And, but it was a great opportunity. I mean, some of the people in the group, Myron Scholes was there at the time, and all the people that you read about in all his books. And so anyway, I went there in 92 and proceeded to watch most people leave for long-term capital. But I spent, my specialty at that point was in emerging markets. And so I really worked in emerging markets modeling risky sovereign debt from about 1992 till 1998 when the ARB group got disbanded. And all that time I would have considered myself on the buy side rather than the sell side, even though Salomon Brothers was essentially a sell-side firm. They had this small group, this ARB group, that really was like a client of both Salomon Brothers and other banks on the street. So I really didn't, and so when that was disbanded, they gave me an opportunity again to do some trading in treasuries using neural networks and to analyze this large corporate bond database that I've been working with for the last over nearly 10 years. But I had to learn the sell side business, which is strategy and whatever else, and I found it in a lot of ways very much to my liking. Was for a number of reasons. We don't have to talk about that now, but anyway, so where over the years I've come to get my own group in credit modeling, and I help clients optimize their portfolios. I'm actually like Arnold, sort of moving more to I actually will be moving out of strategy because of regulations into a sales and trading role, where I'm more of a desk quant, where what I publish and what I write about, I can actually give to clients and don't have to, have the same sort of objective quote research banner that I had in the past. I can actually help market deals and whatever else. So I'm getting a little more on the on the direct marketing of the business side, but that's really where I'm at now, and it's been for me, like Ron said, an incredibly rewarding career. The farther I go on, the more, actually I like it. Finance has become as interesting a problem for me as the brain or physics ever has been, and so, I'm having the time of my life, really, so that's it.
Besides luck or coincidence, what made it easy for you to be where you're at? And that's a question for the three of you, Jimmy, if you would like to start.
In terms of what made it easy, I think it's a combination of things that's really hard to replicate. It's luck and timing. I've only accepted 2 jobs in my life. One was at MK Wong and Associates, and then the second one at BGI. I've been very fortunate in both of those firms that I joined them at times when they were in the midst of growing the areas that I was interested in. So I decided very early on that I was interested in the buy side, and very early on I was interested in fixed income, and I've been doing that for close to 15 years now. So I've been fortunate to, both through luck and through timing, to join firms that have built out aggressively areas that I've been interested in and been able to grow with the firm. So I think that's predominantly one of the reasons that I've been as successful as I have been.
Yeah, I don't. I'm not sure that there's been. It is an easy road, out there. Quite honestly, I totally agree with what Jim was saying. There's a lot of luck involved, most of which you can't control. When I entered into the sell side on the foreign exchange sales and trading floor, nobody was really doing anything that was analytical. It just didn't really exist. And I had just moved from the buy side where, everybody did, you thought about strategies, you built the strategies, you went and sold them, and then you maybe even traded them or you worked with the traders. So I came in with a very different point of view, which is, I think in some respects, I don't know if you could make a case that it was easier for me because there wasn't a lot of competition. On the other hand, you can make a case that it was a lot harder because nobody was really there to accept the fact that you could apply quantitative techniques to, financial assets. So in that respect, maybe you've all got it easier than I had. I started out doing quantitative research. It was me. And then within a handful of years, it became a global group, and we basically dominated. I think what makes people successful, and if that's easy, maybe it's the one thing that I've sort of hung on to, 2 things. And this is a true story. When I was an engineer, a consultant asked me, whether I knew what the difference was between a good engineer and a bad engineer. And I said, no. And he said, well, it's not the number of mistakes that you make, it's the number that you catch. And that is something that has stuck with me forever. And the one thing is that whenever I send something to a client, whenever I send something to my boss, I do my darndest to make sure that there aren't any mistakes in it. And believe it or not, that's not an attitude that a lot of people have. They kind of think that they're sending it on to their boss. The expectation is my role is to catch all your mistakes. And if you do that, you don't really develop a lot of confidence in the person who's sending you that stuff. So I think the key thing is to figure out, what your unit does, how you add value, what's your added edge in the group, and to work on those things and to deliver it. And in that respect, if you follow that path, it maybe is an easy road.
Yeah, I don't know that I would have to say that it's been easy either. I guess the easy parts of what I have to do for me have come because, one, I think I got a good solid education in mathematics, computer science, and as a scientist, and good training in writing and speaking. That has helped me. The other things have all been pretty difficult for me. Again, I have to say, like Arnold, I seem to always feel, if even erroneously, that I am fighting a battle against ignorance and in the markets, or meaning no. When I consider the corporate bond market when I arrived 10 years ago and what models were in place there, they were still basically traders who relied on, basically we brought out new issues. They knew where they put the bonds. They weren't interested in hearing quantitative approaches to credit. I mean, ultimately the markets, and I started building an infrastructure then and trying to get a voice, trying to get salespeople to take me here or there. Over the years, I've managed to build that up and create my own business out of it, but I feel that it isn't a resentment, I just feel that it really took energy. Where I was, the skills I brought to it were an ability to concentrate for a long time, some degree of internal compass to where I could, sort of focus on my goals, managing to do enough of what the firm wanted to allow me to build what I thought was a very long-term winning strategy for myself and carve out a role for myself that was good. I guess the other problem, the hard thing, I guess, was my own personality, right? I had to learn how to function in a culture that was, ever-changing, dynamic, with a lot of different people in it, and work across groups, and all those things were difficult for me, were things I hadn't learned, okay? In addition to the finance that I had to learn, I think I got a pretty good education there, but I think for me it was difficult, and probably the most difficult was my own personality, and nothing else, and so I think, the corporate environment, people criticize it and whatever, and talk about being a cog in a machine. I think, at least for myself, the sort of personal transformation that I had to go through in order to function effectively amongst people with different ideas, to listen to people with different ideas, to be able to, get things done across product areas, really required me to grow as a human being in ways that I hadn't anticipated. And it's really those that were not difficult, but also I think that I attribute most to my success. So.
Okay. How quickly can you identify the young professionals who will likely become successful, and how often have you made, or do you make, erroneous judgments? I think, Terry, how about if you start?
No, I really think, this is a very important question, because literally, people think it's very, well, I don't know. It's very costly to make a mistake in this business, at least for me, because we hire so very few people a year, and we put a lot of energy and time into training them. And and I have made mistakes. Fortunately, right, the hiring decision doesn't hinge on me alone, and that's the one, consolation I take, right? If we make a mistake, we do it collectively, and we have made mistakes. But I would say, well, seriously, that you put together a consensus of people, right, and a consensus view, and sometimes it goes against my view, and I'm happy with that. That's okay, but. The point is that, it's the best view that we can come up with amongst ourselves, and everybody sort of gets some input. And that's the way it is. Yes, we make mistakes at times. Actually, it's been fairly minimal. It has been fairly minimal. Sometimes we err on the side of conservatism. Rather we won't just grab somebody and put them in a position. We would rather leave the position open. Again, with the worry that if we don't fill it, it might go away. Unexpectedly. But really, seriously, I think, well. All right, that's just, so the point is it's costly to make a mistake. I don't think I could continue in this job if I made a lot of mistakes. But from my job, actually, in the recruiting function, is to minimize the time, is to get the most talented people into the firm while minimizing the sort of effort I have to make, effort and expense of our firm, which tends to be with my colleagues, interviewing, whatever. So my most important function really is screening and minimizing the time that I burden my other colleagues with, who also have jobs to do in the interview process, realizing that it's incredibly important not to make a mistake.
Arnold.
I'm reminded of that consultant that said, "It's not the number of mistakes I make, it's the number that I catch." No, that's not really what it said. Here's what I think. Have I made hiring mistakes? Absolutely. And you can't get around that when you hire a lot of people. It is going to happen, and certainly during my career, I've hired a lot of people. I think the important thing, or one way to maybe turn this question around is, what do we think about, and what should you be thinking about? A lot of what happens in a trading room is over the phone. 90% of the time if you're calling up a hedge fund or calling up somebody at BGI, I'm going to get voicemail, right? So you have about 10 seconds to leave an extremely meaningful sound bite. And, my suggestion is that when you're in a room and I'm interviewing 10 or 15 people in a day, 30 minutes, I don't have a lot of time to assess people, right? So I have to come to a quick decision just because the schedule is so tight. Your job is to convince me in the quickest and fastest, shortest possible time that you're worth continuing having a discussion with. From my perspective, I don't know if this is the way that Terry works. Firstly, I'll say that our views are probably very different, and it's not like there's some Citigroup Bible that says this is the way it works. Well, maybe there is. I haven't seen it, or I probably wouldn't have read it anyway. But probably a bit harsh, but it's a lot easier for an interviewer to come up with reasons to say no than it is to say yes. And I will say that things are significantly better and fairer. You know, we have teams of people that will evaluate candidates, whereas in the past it didn't work that way. And I'll share a story with you. It was at another shop where I was talking to the head of trading in Europe, and there was this pile of CVs. And I looked at it, I go, what is that? And he goes, oh yeah, we're looking for a trading assistant. I go, wow, that's a lot of resumes to go through. He takes the pile, he splits it in half, he takes one pile and he throws it in the trash can. He says, yeah, I don't want to hire somebody that isn't lucky. So, maybe that works in trading. I'll just say that for some of those guys, they got a real quick look.
In fixed income at BGI, I think we've added just over 80 people globally over the last several years. And I think over that time, if I look at those 80, I've probably been involved directly in maybe 20 to 30 of those. We have a pretty structured interview process at BGI that does help in terms of improving that success rate. If I'm honest in terms of mistakes, it's probably in the 10 to 15% realm. Some of those we fixed and some of them we're in the process of fixing. I think something that's unique at buy-side firms relative to sell-side is that our org structure tends to look more like a rectangle on its side than a pyramid. So we don't take a lot of intake of junior people and then toss out half of them after a year and another half after a second year. We would tend to bring in about as many senior people as we are bringing in junior people. And so that it means when we're assessing junior people, it's a little more challenging. We're probably more selective. And we're looking for some specific qualities. With more senior people, I think you get a bit more of a track record in terms of success. With more junior people, you're really having to assess skill set and cultural fit. And I think of those two things, skill set and cultural fit is by far the hardest one to determine. If I look at the hiring mistakes, they're pretty clearly individuals where, for whatever reasons, they just didn't mesh with the team, they didn't mesh with the individuals they're working with, and they just weren't a fit for BGI, and those are the ones that we've tended to have to take other steps with.
You talked about the importance of catching mistakes, of adding value, looking at your own personality, culture, etc. But here's the question: and when you discuss yourselves, but is there one single criterion that is likely to make an MFE graduate successful? And perhaps at the same time, could you tell us what made you successful? You did, Jim, for instance, you talked about luck and timing, but gentlemen, you have also seized opportunities at a specific time, I am sure, and it would be nice if you could share that opportunity, that example with us.
Sure. I think the biggest, if I had to identify one criterion that I'm looking for in terms of cultural fit, it's going to be it's either passion or fire in the belly, or it's a real drive and interest in terms of this field. I can remember back in when I was in my undergrad courses that I would have some project that I was working on, and I would stay up late trying to figure it out. Had nothing to do with the grade or anything to do with the school. It was just really intrigued me, interested me, and I wanted to spend the time on it. You invariably find individuals who are in this not necessarily because they love the field or they're interested in it, it's because they think that it's a good paycheck or it's a good career path. I would just suggest to you, you want to do outside reading, you want to read, Liar's Poker, you want to be up in terms of what's driving the markets. Invariably, when we're interviewing someone and they just don't have a sense in terms of what's driving the market, it tells me they don't have a passion for it. It tells me that this isn't their primary driver, and I know what the workload is like in a program like the MFE, but you really have to take the opportunity to learn outside of just your course material in terms of what's driving markets, because it's really what's going to differentiate when we're in the midst of a hiring process.
Yeah, I would agree with the fire in the belly comment. That actually, it's interesting that you use that. That is something that we use very often when we're speaking to candidates. We're not in a position to have a lot of people in the business, and everybody has to be excited about sales and trading in the FX markets. I think for you all, it's the likelihood of being successful greatly increases if you like what you're doing. If generally my experience has been that successful people are very happy at what they're doing, and it's hard to be successful and fake it. There are some people that are incredibly gifted that probably can, but I don't think that's sustainable for very long. So I think at the end of the day, you've got to be very honest with yourself. Who am I? What do I like to do? What is it that I don't like to do? And to some extent, you're not going to know what it's like to work in a particular environment. When I was getting out of business school, I didn't know what the difference was between sales and trading, which probably explains why I started on the buy side, because it was just like completely bizarre to me. I was interviewing on buy side firms and then corporate finance jobs, and never believed I wanted to be in sales and trading, and now this is where I've spent the majority of my career. Two things that I think create value. I'm not so sure you can be taught this first one, but I'm of the view that there's two types of financial engineers, researchers, whatever you want to call them. There are the innovators, and then there's the replicators. And at the end, and both are very valuable, because replicators will take ideas that innovators have and make them better. Innovators, however, are just a completely different breed, and it's something that I'm of the view that you either have it or you don't, and that's not something you can learn in school, and that may or may not be something that actually right now. The other part that I think is successful, maybe it's because I'm on the sell side, but I think it requires a fair degree of paranoia in the sense that you're just not good enough. If you're a trader, the meter is reset to 0 come Jan 1. Same with sales. But every job that you take on, that's another step. Inevitably, there's some element of it that you've never encountered before. And you've got to ask yourself whether you're up for that challenge to take that on. And again, that requires a fair bit of honesty. On a personal note, when my boss asked me about being the head of North America, I wasn't really sure I wanted to do it. For a variety of reasons, because on the research side, you don't really get to see a lot of the sales and trading issues. And to some extent, and it was a large bet, not just by me, but also by the firm. Would say categorically, I'm the first person to hold that role that was neither a trader nor a salesperson. I think for this group, that's a great signal, assuming I don't mess it up for you guys. They'll do a been there, done that kind of thing. So I will make a commitment to you all that I'll try not to mess it up. But and again, maybe that's me. It's just part of that paranoia attitude where you've just got to believe. If you want to be in the business for a long time, there's always somebody out there that knows more than you do. There's something out there that you can learn that you don't really have the skill set for, and you got to be prepared to invest in yourself to do it.
Yeah, okay, and I'll have to say that probably each of us has a little bit different slant because we hire a little bit different people. I mean, I tend to, again, hire for the, fixed income strategy, so I tend to hire strategists and quants. And so what we look for there is, first of all, basic math, computer science, skills, and that's the easiest cut. I think Jim mentioned it too. Typically we'll look at the resume, and if you look like technically competent, and look good, that would get you probably an interviewer among the people that we think have the technical skills. then you come in, and if we find out you don't have them, that's an easy cut. The harder cut starts to do with the less tangible things, but experience becomes one of them. What types of products, what kind of financial experience, what sort of commitment. The fire in the belly, there is still that. I mean, it isn't the trader fire in the belly, but it's the enthusiasm, it's the passion, I guess, that Arnold mentioned, which, right, I like to see somebody who's passionate about what they do, a love for finance, that, interested in problems. Also, I will find, because, literally, all of you probably here, certainly in the MFE program, are highly quantitative people, probably scored, extremely well on your exams. And, I can say this, because I get 500 resumes a year, that, at least for me, the mathematics skills are a commodity. What sets people apart are two things: the ability to go from the equations to the real world problems, right? I know people who are incredibly good at, it scored all these tests, can't understand why they didn't get hired when, you ask them to generalize about something that wasn't in the book, and they can't do it. Synthesizing information, the ability to take outside facts and put them together and have formed some framework, some way of looking at the world, even as incomplete as it might be. That's useful. The ability to communicate. I sit here and I look at people, okay, how is this person going to be in front of a client? How is this person going to interact with the traders? How is this person going to interact with the salespeople? How is it going to interact with the colleagues? The worst thing I can do is bring somebody with a bad attitude into the firm to poison what I really feel that my biggest role in the recruiting process, and why I think it's one of the more important things I do, probably disproportionately get paid least for, is that I try because I've worked, I've come in the part of the business where there were few quants and where people used to get, verbally abused, and I've worked with very difficult bosses at times, and, I, sort of make it a personal sort of, thing, and it really has worked in our department to create a department where people work together, where people are cooperative, where they're unselfish, and one bad person in a group can actually ruin the dynamic, and so it's so very important for me not to make a mistake on the personal dimension, and I view that as critical. And so, but again, communication, because we're a big firm, it's very important that one be able to independently, initiate contacts in other areas of the firm. Can they speak to somebody who's a rank or two above them? Can they use a phone? Can they, instead of writing an email, give somebody a call? I mean, these are the kinds of things we can't always determine, but we try to. And that's probably it.
Yep.
The current MFE students who are here and some of our graduates would like to understand better the different career paths and promotion in the industry, in the sell side and the buy side. So let's start with the buy side with Jim Gilliland, and talk about, like, for instance, could you talk within, or either in general within Barclays Global Investors, the titles, or since you have hired several MFE graduates since 2002, do you start as an associate, then for how long, and then you move on to what? I understand, I believe that there is a promotional path, and obviously it could be shortened or lengthened, but if you could give some examples, that would be good for us. Go ahead.
Yeah, absolutely. It's quite a bit different than the sell side. We only have 3 corporate titles. I think everyone's a vice president in the sell side. We have just associate, principal, and managing director. In some respects, an MFE is less of a degree when it isn't paired with something else. So an MFE undergrad finance means something entirely different to me than an MFE PhD physics. And those types of individuals will come in at different levels depending on their background, depending on their prior work experience. We would tend to hire MFEs either as associates or as principals. The difference between a principal is they would tend to have some type of work experience. We generally look for somewhere between 5 and 7 years of work experience. If we're looking to bring in an associate and say that within the next year or two you have the opportunity to become principal, we tend to be looking for the ability to influence others, to provide initiative, to provide some leadership within their area before they are promoted to principal. The final corporate designation is managing director. Within fixed income, we have 160 people globally. of which 6 are managing directors. Within my area, I have 1 managing director that reports to me, and there's 4 in North America in total. In terms of a managing director designation, is it possible or likely for an MFE to become a managing director? Absolutely. What we look for managing director promotion is someone who is managing a significant portion of the business, and that's providing leadership for a significant portion of our business. Sometimes that leadership is in terms of the number of people who report to them. Sometimes that leadership is around intellectual leadership of an area that's particularly important for the business. But at the end of the day, they have to be substantially influencing a significant portion of our revenue such that they are providing that leadership and management around that area before they're promoted to managing director. In terms of the 7 people in fixed income, we have 2 from my year in 02. It looks like 2 from 03, 2 from 04. We missed 05 for some reason, and then 1 in 06. The types of things they're doing, just to give you a sense, from anywhere between 4 and 5 years on. 2 of the individuals from MFE or 02 are in pretty senior roles within fixed income. One is heading up structuring, portfolio management, and research. So he oversees a team of around 6 that develops a lot of our CDO analytics. We manage about $4 billion in collateralized debt obligation as an investment manager, and he runs a lot of the infrastructure as well as the structuring team that is responsible for that area. I also have 1 MFE who's responsible as a portfolio manager and researcher who's looking at credit relative value strategies, term structure trades, different types of credit relative value opportunities. In 03, we have 2 individuals in research, one who is heading up securitized credit research, so looking at asset-backed securities, analyzing quantitatively collateral characteristics, loan level characteristics for subprime securities, and then 1 person who's focused on rates research. We have 1 person who's in credit portfolio management. He manages about $8 or $9 billion in credit funds, as well as trading for that. And then the final 2 people are in structuring research and securitized data and research, so doing various research and data-related projects for us.
For the sales side, Arnold and Terry.
Yeah, it's funny, when Jim was sort of laying out the levels at BGI, there's 3, and I was kind of writing them down, like, how many are there at our shop? And there's you know, I would suppose there's about 6 formal ones, and then there's probably another one, which would be analyst, associate, and then kind of a non-associate, junior trader, junior salesperson, VP, director, MD, and then super MD, which isn't a real title, and I can guarantee you neither one of us are super MDs, so I think there's probably about 5 of those in the firm. You know, I sit on a number of promotion committees, including the MD one, of which there's several MD committees. And at our shop, let me just start with, you know, that one. The managing director process is a very, very thorough process. There's a lot of recommendations that are put forward. Basically, you can only be even thought of as a candidate if you're nominated by a handful of MDs to begin with. And then that sort of sets things in motion. And then in a room where we're discussing, you know, the merits of various MDs, not everyone's going to make it. In fact, the majority of them are not. And, you know, on this board, there'll be a very large list of candidates. And I can tell you that there is not a bad candidate, an undeserving candidate on that board ever. You know, so one of the things I truly believe in is that as you progress through your career and as, you know, maybe higher or more responsibility, however you want to think about it, the things that I ask younger people to think about are marginal differences. Marginal differences are increasingly important the higher up you go in the organization because the skill set is more generalized. So again, in the, you know, there can be histories of people where there's a really great trader. He's made a lot of money, but he's got quite an attitude and causes a lot of noise. That, frankly, the only person that really likes that guy is his boss because he makes a lot of money. Everybody else may not like that person. That type of marginal difference, if you will, isn't something that anyone's going to focus on until the MD process, probably, because it's sort of accepted at that level. The other thing that's considered is if you're not made an MD, it's how do you handle that? The one thing that, maybe less so for these guys, but certainly in my career, it's not been very smoothly upward sloping. There's a lot of retracement in terms of how my career path has gone. And I think a lot of it is, your attitude in terms of how you handle that adversity at that moment, which when you reflect back, maybe it's not such a big deal. At that moment, it can be a really, really big deal. And you have to be in the right mindset to plow through it. And trust me, if you're in the MD nomination pool and you don't make it, that's a big moment. You've got to be able to handle it. It's not a slam dunk. There are a lot of variables out there. I think networking is very, very important, believe it or not, across, especially at a place like Citi. And the way these selection process works, there are a lot of different ways that people get looked at. And in the end, I truly believe that the right people make it. But it's not a real straightforward process. In terms of career paths for MFEs, I touched on the fact that I've got this new job as the head of sales and trading, the first kind of researchy quant guy, non-trader, non-salesperson to hold the job. I think the market has changed a lot. We have a special program for analysts where we go out and we look for the quantitative analysts. We have a special program called the hybrid program. And I'm a member of the committee that looks at promoting sales and trading analysts and the hybrids to associates. There is a massive bid on the trading floor for hybrids. I can tell you that right now. So in other words, people in this room, people who have those quantitative backgrounds, notwithstanding the fact what Terry had said is very true. You need to have good communication skills. You need to have good interpersonal skills. It's not just all about being able to solve a problem. That's how you work in a team environment. But I do believe that this is a big change in the industry. I think it's recognition that the world is a lot more complicated. It's a lot easier for us if I can just assume that you know how to calculate a rate of return on something and we can kind of move on. So in that regard, I think there's very good things ahead for you all.
Can you be an MD or a director or an MD and actually not manage people?
You're asking me?
I'm asking anyone in the panel. One person can answer that question.
Theoretically? I guess practically I don't know. I can't think of an example where that's true.
Okay.
You don't manage anybody in your director or MD? Maybe if you're in human resources or something?
Well, if you're
maybe
if you're a top producer on the floor, either in sales or trading, you might be able to do it. There are a lot. In fact, I know we have a number of them on the floor.
Quant traders.
That either salespeople or traders.
Yeah, it could be.
They can be MDs. But that again. I guess the one thing to think about is if you were in a group and you're hoping to get into a club, the MD club maybe, and there's one MD there, you might want to think about another group that's got like 50 of them, because there's 50 votes as opposed to one.
And I think within the industry, increasingly values being put on a finance professional's ability to attract and retain talent. It's in some respects, it's a very difficult market for candidates because there's a lot of great candidates, but it's also a very difficult market for high quality individuals as well. So if you have a senior person within the firm who is able to acquire the right type of talent, able to keep them happy, and able to build out that team, that is definitely the type of thing that gets incorporated in that managing director nomination.
Okay. Let's talk specifically about the positions that our students get when they exit from the MFE. Can you discuss, and you can choose just one, we can go through one person to another. What does a quant on a trading desk do? What does a structure do? A trader model validation or risk manager, and at the same time, if you choose one, could you discuss the skills that you're looking for in that individual? Maybe we can start with actually Jim, since you also have hired, and the buy side, and since you've hired some MFE students.
Yeah, I guess a typical role for MFE would probably be in quantitative research. So I'll give you an example. We recently brought on someone to join our credit research team. The type of work that they would be involved in, we take a lot of fundamental data and convert that to quantitative or fundamental insights and convert it quantitatively to build inference as to what's going to occur in capital markets. So give you a very easy example. If a firm's earnings are growing much faster than its cash flow, they tend to disappoint on earnings going forward. So if you're seeing that they're taking a lot of accruals to help develop strong earnings relative to cash flow, that will tend to mean revert over time. When those companies disappoint on earnings, they tend to underperform, and they tend to underperform both in equities as well as in credit. So if you have a company in an industry that is having significant accruals or significant earnings above cash flow, they will tend to disappoint and their credit spreads will widen. So a researcher, MFE, in their first role, they might be working with our head of credit research, an individual by the name of Scott Richardson. He's very well published in earnings quality analysis. He was a former professor at Wharton. He heads up that area. They would be working with him, developing different insights on credit markets, looking at the impact of various accounting statement measures, looking at the impact of various earnings analyst estimates, how that impacts credit markets, and then using that to help construct credit strategies that we would manage on behalf of our clients.
Yeah, I guess I'll touch on the trading side. As I mentioned, there's a very strong bid for quantitative people. And by trade, by trading, I just mean on the sales and trading floor. I think the quant type people will end up on the trading side either in a prop group, some relative value group. The groups that I run, which are kind of researchy, we do quantitative trading models. I run a structuring group. There's a tremendous amount of work going on right now in foreign exchange and high-frequency trading, where positions are held for maybe 500 milliseconds. So that's not a joke either. I'm telling you the truth. There's a whole explosive industry in new pattern recognition techniques and extremely high-frequency trading. So there's a wide variety of jobs that you could start out with. Is it possible to be a spot trader and then become, a quantitative risk advisor or to be a structurer? The answer is yeah. And I'll give you an example. A person who works for me is the global head of my corporate risk advisory desk. We advise corporations on how to manage their risk. He was a spot trader. He went from spot to forward, from forward to options. He was a options structurer, and then decided he wanted to do some quantitative work, and he's now the global head of this group, and it's the #1 group in the world at what they do. So, I think, you can move around, and the key is, to be in an environment where they recognize valuable people and that, you're sort of focused on what you're doing, which is basically to deliver value. And if you do that and you're in the right environment, then opportunities will open up.
Okay, yeah, and I guess I'll focus on basically, Arnold has talked a little bit about the hybrid program, which is actually a joint program between what I would call strategy and the trading desks, and it does take place at a more junior level than I typically recruit for, but that program probably 80% of the people in that program, that would be somebody with an undergraduate degree and a one-year master's of financial engineering. About 80% of those go into trading, and about 20% go into become associates in our associate program. Now, typically what we're looking to do in our associate program, the one that we hire, is to train what I would call strategists with a little bit different, sort of more ad hoc ad hoc recruiting for what I would call quants, but there are really two sort of major roles, I would say. And a strategist is more like a fusion between what might have used to been called a fundamental analyst and a financial mathematician or something. Meaning we take, basically mathematical or financial mathematical approaches to market movements and whatever. And it's very much a role where a client advisory role or an auxiliary role to the sales force, where we provide clients with ideas and other sorts of things. Now, a good number of MFEs from this program and others have entered into that particular role and have proved very successful. None of them have been with us long enough to advance beyond the role of vice president, but they are coming up the ranks as fast as anybody else, and there is no theoretical reason why an MFE couldn't come to head fixed income. I mean, at some point, maybe not the firm, you have to be a lawyer to head. But in any case, but seriously, there's, once you get in the firm and are working, literally a lot of your educational background gets forgotten. I mean, you're in the business, and if you make money and you perform, you're all right. So the point is, though, is that people specialize. The more quantitative people end up going to sort of non-customer related roles, which end up supporting for example, the credit derivative desk, building correlation models, figuring out what our risks are on a daily basis for the desk, helping them in their daily trading activities. And then there are the other people that go more to support the sales effort, that, go out with the salespeople and give clients, trading ideas or market intelligence and so forth. And basically that becomes a matter of temperament. There are successful careers along both dimensions. Some of the most successful people are people that do a little bit of both. And so that's really,
A quick side comment. You all discussed so much about the importance of adding value. So the comment was that, I handed an assignment for the students for Monday, and that's to really start thinking about the unique value that they can bring to this program, and we will help refine that as we go along. So take that assignment very seriously. Here's the next question, and let's talk about where, we've seen a tremendous growth, and I personally think there's going to be, again, there's a tremendous demand for financial engineers, and for the first time, as we help place students, we've seen growth in Asia, where I think at this time probably 12 of the 59 students who graduated in 2007, are going to be in Japan, Hong Kong, Singapore, etc. Could you discuss, the growth outside the United States besides, Europe or growth in Asia, Europe, and where else, and perhaps even Dubai?
Well, all right. Let's see where to start. I guess the general demand for financial engineers. I'll just echo what went on in the last panel. The markets are becoming more quantitative every day. Even markets that were considered, less quantitative, even, I can't even say it, but traditional markets with traditional asset classes are becoming securitized, giving rise to tranche products requiring knowledge of correlation. It's just beyond the education level of your typical MBA. So the whole skill set used to even deal with these on a daily basis requires a knowledge of advanced mathematics and computer science, and to manage a trading desk that deals in these products becomes paramount. But even as I look through all the other areas of the firm, the intense demand for risk management, for understanding exposures. So we have groups like model validation, risk architecture, even financial strategies. All of these are getting more and more quantitative, and I really think that the demand for quantitative individuals is fueling this. On the other hand, as people also say, right, the number of programs also springing up, is increasing, and so the number of people out there with this kind of education is increasing. But right now, I don't see it outpacing the demand.
Go ahead if somebody else wants to.
Yeah, we have offices in Hong Kong, Singapore, and Tokyo. Hong Kong and Singapore are primarily sales offices. We have probably somewhere around 15, 20 people in those two offices. Tokyo is full portfolio management research as well as sales. I would say that the percentage of quantitative individuals within Asia or within those areas is probably broadly similar. So I don't think that there is a less percentage quantitative. It's purely a function of the number of positions. And we still have largest offices in San Francisco and in London. Those are where something like 2/3, 3/4 of our individuals are housed. But if you look at the percentage of MFEs or percentage of quantitative type individuals, I think it would be broadly similar in Asia as it is in more developed markets. It's just they tend to be smaller offices, smaller markets, given the level of volumes that we're seeing, but they're smaller as well as growing, which makes an interesting opportunity for some of you.
Go ahead.
Okay, well, I wanted to finish. I forgot to make the second point, right, which is, just in terms of, I'll give it to Arnold because it'll be different business, but we've literally gone from, I think, about 3 people in strategy in Hong Kong, which is really where our strategy people are, maybe we have 1 or 2 in Australia, but to about 16 or 18. So proportion-wise, the growth will be, even bigger. Our main, again, we're about, 150 people in New York, half of that number in London, and then, roughly 18 in Hong Kong. What usually is the method is that people come from New York because there isn't a very development culture yet in those areas, that people typically that are staffing those offices have trained in New York for a few years and brought what we do in New York to Asia. So right now there's not a lot of endogenous, analytics and whatever being developed there, but more application by people who've learned their trade in New York.
Yeah.
Yeah, for us, I work in foreign exchange, which is about as global as it gets. And Citi has a very, very broad platform. And, we pretty much have trading rooms just about in every country you imagine. And as I said, there's a very, very strong bid for anybody that's analytical in a variety of different roles. Asia for us in our business and certainly at the company is a critically important area. I think the franchise is really the U.S. and we've got a very, very solid platform in Europe and Middle East, Africa, and then Asia is where we really expect there to be a lot of growth. Yeah.
2 questions, but only one person will answer the first question and the second. If we have a slowing economy, what advice would you give an MFE?
Sounds like an Arnold question, doesn't it?
That's an Arnold question?
Yeah, don't you think?
That's Arnold.
That was just a perfect
Yeah, all right. Thank you for the easy one. I'll put it in perspective. I graduated from B school in '87, right, which was basically the top of the market, and and then we had the market crash. Is there anything that you can do? No, unless you have a massive short position on, you're not really going to. There's nothing you can do career-wise to offset that. That said, however, that there is, just as there's a very strong bid for quantitative people, there's always a bid out on the buy side, on the sell side for good talent, right? And it doesn't matter what the cycle is. So you have to get yourself to a position where you know what your core competence is. You have the passion in what you want to do. You can articulate that in a very quick period of time. And you know what? You don't have to worry about what the market does.
Okay. Last question for Jim. What turns you off in a young professional?
For me, it's kind of derivatives of the same thing. It would be ego, attitude, any sense of entitlement, anything along those lines. You can pick that up very quickly. Those aren't the type of people that we look for at BGI, and they would definitely turn off myself and our recruiters pretty quickly.
Same thing works in the MFE program. We have a lot in common. I'd like to open up to questions. Go ahead, sir. Can you actually stand up and really, say your question loud, please, so that everybody can hear.
I had a question on ageism and quantitative finance. Is there an ageist issue? Well, let's say you have a person who's worked for 10 or 12 years and then or an MD, and you have young, fresh graduates with a couple of years of experience. You know, is there an age problem when it comes to being hired or fitting into the culture?
That's me?
Yeah.
It's a Terry question.
Yeah, okay, yeah. Let's see if it ever comes. Actually, I would have to say no, but let's say where that could be important, okay? And this is typically what might happen. There might be a professor out there who's been a professor for 20 years of statistics and never done anything really applied, but might even be, have done some things of usefulness in their field, and they want to make a change. I think that, while not age so much, is not looked on as the same education if somebody were, say 20 years younger. They probably couldn't be as accomplished, okay? But somebody who has gone, that same person, right, who went back and spent a year or two doing a computational finance program, I think might be a very valuable contributor. They may not. Then the question is, are they willing to come in at a level that would be commensurate? They probably actually would come in at a vice president level, just as Jim was saying, that that work experience would count as something. They would be something a little bit more than an entry level position. But yes, absolutely, and it happens. I mean, literally, I mean, I can say that we've had a professor from NYU, tenured professor, who came in, worked a year. We would have hired him full time, right? But he then wanted to go back and teach. He took a year leave of absence. He's still loosely affiliated with us, but I don't, particularly in our sort of business, I don't think it's such a problem. But again, that person wouldn't come in at an entry level. I would have a hard time hiring that person as a new associate in my group and expecting them to, start building infrastructure, and they probably wouldn't like it either.
Other questions? Yeah.
Just sort of on my focus a little bit on young professionals. Since the financial field is fairly new, someone who's been working for MS and quantitative stuff, who now wants to go over to NV and they've done nothing more than qualifications. Don't you think that there is some bias there as far as, well, is this person going to want to retire too soon? Are they going to have the energy that the young person has?
Is your question actually this person entering a program or working in the field? Because is it? Is your question, is there discrimination against a person who, is in her or his 30s or 40s? Well, very quickly, actually, if the panel members allow me to answer that question, I can
I'll
answer.
just answer very quickly. It's very typical for somebody who's been in IT in our firm for 10 years maybe, and who's gone to NYU and picked up an MBA or a Master's of Computational Finance to transfer into strategy. Very common.
I mean, we haven't
I like
observed
that
that.
because it gives people incentive.
No.
No, it's illegal, by the way.
It's
also.
a question.
At our shop, we have an organization called FIC, which is a big business. It's fixed income currencies and commodities, and it's a huge business for us. And I'm part of the 20MD Diversity Committee, and I can assure you that age discrimination does not occur, not at our shop. It would not be factored in. I mean, what's going to matter is, again, can you Articulate why you want to be in this business. What's the story that you can tell that's going to connect the dots to get you into our shop? That's what's going to matter.
Well, at the end, it's also the skills that you bring to the table and what you can do. I mean, this program has people who are very, very young, and yes, there is a demand for young traders, but also traders who are in their 30s on the prop desk, something that, and look at this gentleman. They're not that young and has a lot of energy, especially Bob Mark.
Yeah,
Next question.
And
Can
just
we
a-
move on to... Yeah, I mean, it's
in terms of just finishing up on that, I think the most important piece is that life story consistency. So does the reason that they've decided to come back to the program and how they got to this point in time, does that make sense, and is that consistent with the types of attributes and attitudes that you're looking to attract to the firm? So it just means that there's a longer life story to get to it, but very clearly that would not be a point of discrimination by any means.
question over there. Yes.
How much is trading like a chess game? Is it about beating the other person and for society not really increasing the wealth for the whole society?
Chess game.
Yeah.
It's more like checkers, isn't it?
Yeah, I don't know. I was really a lousy chess player, but I seem to be okay on prop. Is it a social good, baby? That's a question. I guess I look at the trading floor and just say, this is capitalism at its finest moment, right? I mean, it's very clear who's winning or losing, and the way that I think about trading is, you imagine especially if you're a market maker, you're walking down, you're rolling a cart down a supermarket, and you're grabbing stuff off the shelf, and then people are throwing stuff in your cart that you may or may not want. And then you swap those out for things as you're walking down the cart, and at the end of the day, you go to the cash register, and you figure out whether you made or lost money. What I believe in, what I encourage within our group and certainly in our business is that, individual success, a team's success, is not based on somebody else's failure, right? We want everybody to win. We're all better off if everybody wins, right? Now, if we're winning, somebody else probably on the other side of the trade isn't having such a good day. But, people don't just trade with one house. They've got a pretty big portfolio, so they've got winning and losing trades in their blotter.
One last question.
In the previous session, one of the panelists mentioned that part of his work involved building models, and another part involved making recommendations to clients 3 times a week, if not more. What advice do you can give us about on how to best manage these long-term, mid-term needs of infrastructure versus short-term needs and the sense of urgency of getting back to your point?
I mean, that sounds like the kind of thing that I have to do on a regular basis, so maybe I should, deal with that in the sense that, first of all, as you come in, you're not expected to, out of in an entry-level position to come in as an expert. I mean, your clients are typically people who have been through, a couple of market cycles and whatever else. There's very little some new person is going to be able to tell this person about something. Fortunately, right, that's why we have a rigorous training program. We try to train strategists. We really think a lot about what it takes to make somebody good, why we rotate people through a couple of groups to give them that perspective, and then find a group that they can then sort of apprentice to a more senior strategist who does go out and do this and who's been doing this, right? You play a part in that part of the machine. You start building a model. You start getting some expertise. Clients start coming to you, and you literally are within this organization an agent by yourself, and you build up the broadness of your expertise. You sell yourself to the sales force. That person may leave. You may be in line for that job. I mean, that's essentially how it happens. And the direction that goes really depends on what you've worked on and how good you are and how effective you are in selling yourself to the sales force, who are the people who put you in front of the clients in the first place.
Okay.
Yeah, and I think at our firm, if I had to vastly simplify it, you probably start out by building models that people are giving you direction around what you should be looking at. Then you kind of progress to the point where you're focused more on implementing models or developing, directing new model development. And finally, you get to the point where you're explaining models to clients and you're hiring people who are going to go out and build and implement new models. It's very natural progression. I think throughout that time period, understanding the importance, how those models are getting used, and then being able to articulate to that client is absolutely critical skill set to have throughout your career path.
Yeah, I'll just add one thing to that, which is, I think, maybe to some extent this goes to the entitlement issue, but there's this sense that you've got all this education, you've got tons of experience, and somebody says, oh yeah, here's this thing in Excel, can you update it? And you're kind of like really bummed out doing that. I spent whatever this program cost, had to get this fancy computer, and now you're telling me I've got to do this. My comment to that is that you will never be asked to do something that we haven't done 1,000 times, right? And you've got to hold on to that fact. You need to, the one thing that I say to young people coming into the shop is, just because we've done this 100 times doesn't mean that it's right. It means that we did it 100 times. So what I look for are people to really understand what we've given them, because I'm hoping it's right. I hope that I caught a lot of mistakes. But, I actually get excited if somebody says, oh, this should have been a plus, or hopefully it's not a plus versus a minus. But, but maybe it's like, some other thing. But hopefully it is. But, at the end of the day, if you learn that model, and what Terry said is spot on, that once you have ownership over something, then you can talk about it. Then clients will come to you. But, you're not going to get that walking in the door.
I'd like to thank you very, very much.
Thank you.